It's a great moment. We meet again for a session of financial reporting. That is section 3. This is your usual lecturer. That is Edwin Ochoi under the number 1 online e-learning platform. So for today, we are going to talk about construction contracts. We are going to talk about construction contracts. So under the construction contract, we always say that there are 2 types of construction contracts. That is the cost plus contract and the fixed price contract. So what about this cost plus contract? So when we talk about the cost plus contract, we say that this is a construction contract. This is a construction contract which the contractor is reimbursed all allowable. That is all about where the contractor is reimbursed for allowable or otherwise defined cost, plus a percentage of this cost or a fixed fee. So another type of construction contract is concerning the fixed price contract. So this is a construction contract in which the contractor agrees to a fixed contract price or a fixed rate per unit of output. So the fixed price contract may sometimes be subjected to cost escalation clause. So you need to know that I have said we have 2 types of construction contract, where we have a cost plus contract and we have the fixed price contract. So the main thing you need to know under this topic of construction contract is concerning how you account. So the accounting for construction contracts. So you can account for the construction contract using either the percentage of completion method or the completed contract method What about this percentage of completion method? So under this method, revenues and profits are recognized as the contract activities progresses. So the cost incurred in reaching the stage of completion are merged with the rated revenue, resulting in profit or loss, which can be attributed to the proportion of the work completed. So that is under the percentage of completion method. So the profit to be recognized will be based on the percentage of the work completed. So any anticipated losses are recognized in full. So, and always we say that for percentage of completion method, we use a formula whereby we will be taking the cost incurred to date. You divide with the estimated total cost on completion of the contract. Then you multiply with 100%. So I've said that for the percentage of completion, you take the cost incurred to date, you divide with the estimated total cost on completion of the contract, you multiply with 100%. Or you can take the value of work certified, you divide with the contract price, then you multiply with 100%. So of which the first formula I've mentioned is the one which is highly recommended, whereby we say that the percentage of completion is the cost incurred to date, you divide with the estimated total cost on completion of the contract, then you multiply with 100%. So we have various percentages, or we have various advantages of percentage of completion method. Why can we use a percentage of completion method in accounting for the construction contract? Where can we go for the percentage of completion method? So what are some of the advantages which are accruing from the use of this method? So the first advantage is that it reflects the revenue in the accounting period under which the activity was undertaken to earn such revenue. Whereby I can repeat and say that it reflects the revenue in the accounting period under which the activity was undertaken to earn such revenue. So it's consistent with the accrual concept of accounting. And remember that we have two concepts of accounting, whereby we have the cash basis and we have the accrual accounting concept. So of which mostly you find that the accrual is the one which is accepted and is the best one, the accrual concept of accounting. And since now the percentage of completion method is in conformity with this accrual concept of accounting, we can say that it's the best method. So I have said that the advantages of percentage of completion method, it's consistent with the accrual concept of accounting. Then the next one is that it reflects the revenue in the accounting period under which the activity was undertaken to earn such revenue. Then remember that even if it has an advantage, there's nothing which doesn't have a disadvantage. So what are some of the disadvantages of the percentage of completion method? So the first disadvantage is that it is subject to risk of error in making the estimate. It is subjected to risk of error in making the estimates. I can repeat and say again that it is subject to risk of error in making the estimate. That is one of the disadvantages. And that is the one which I can mention. Then now we have another method, which is now the completed contract method. The completed contract method, from the word even completed itself. From the word complete. So remember that under the percentage of completion method, I said that revenue and the profit are recognized as the contract activity progresses. But now under the completed contract method, on this scenario now, we only recognize the revenues and the profits when the contract is complete. But under the percentage of completion method, revenues and the profits are recognized as the contract activity progresses. So that is under the percentage of completion method. And this one will be the best other than the completed. So the percentage of completion will be the best because obviously it will be tracking the transactions. It will be tracking the cost. It will be tracking the profits as the contract progresses. But now under completed contract method, you have to wait until the contract is complete for you to recognize the revenues and profits. So what are some of the advantages? Even if I can say that it's not that of a good method, but it has some advantages, whereby I can say that it is based on the actual resources. That is, a profit is determined when the contract is completed rather than estimates, which may require some adjustments due to the unforeseen cost. So now this one is based on the actual resources, because now the way I said that profits, even the cost, is determined when the contract is completed rather than using the estimates, which may require some adjustments due to unforeseen cost. Then the element of risk is minimized because profit is realized on the completion of the contract. Besides the advantages, always we must have disadvantages. So what are these disadvantages? So one of the disadvantages, and that is the only one I will mention, is that the income statement does not reflect the level of activity on the contract during the period. That is, it is inconsistent with the accrual concept. So anyway, let's say in an exam situation, you can even say that it is inconsistent with the accrual concept. Because like now, revenues are only recognized until the contract is complete. Unlike the previous method, I said that we always track for the revenues and even costs as the contract activity progresses. So this completed contract method, it is obvious inconsistent with the accrual concept of accounting. With the accrual concept of accounting. Then we have various disclosure requirements. Various disclosure requirement under the construction contract. So remember that there's no topic which doesn't have disclosure requirements. So what is an entity supposed to disclose, which is under this construction contract? What an entity is supposed to disclose? So the first thing the entity is supposed to disclose is the amount of the contract revenue recognized as revenue in the period. So the contract revenue, which was recognized as revenue in the contract period. Then another one is the method used to determine the contract revenue recognized in the period. Then third one is the method used to determine the stage of completion of the contract in progress. Then for contract in progress, at the end of the reporting period, an entity should recognize the following. So before moving to that point, remember that the first thing I have said you are supposed to disclose is concerning the contract revenue recognized as revenue in the period, so contract revenue. Number two, I say that determining the contract revenue. The method, that is, to be specific, the method used to determine the contract revenue. Other than the contract revenue recognized as revenue, you have to determine the method. You have to give us the method used to determine the contract revenue. Then we have the third one is concerning the method used to determine the stage of completion of the contract in progress. Then I was moving to the other point whereby I was saying that for contract in progress, at the end of the reporting period, an entity should recognize the following. The first one is all about the aggregate amount of cost incurred and recognized profits. Rest, you have to deduct any unrecognized losses to date. Like now, the latest equation which was tested, you will see something of that kind. So whereby I've said that for the contract in progress, at the end of the reporting period, like now, let's say if a contract was done in this year, the next year, so it's just a contract in progress. So you have to recognize the amount, you have to disclose the amount of cost incurred and recognized profits. So you have to deduct the unrecognized losses to date. Then again, another thing you have to disclose for this contract in progress is the amount of advances received and the amount of retentions. So the amount of advance received and the amount of retentions. So, and that is the theoretical part of the construction contracts. So for us to understand more about these construction contracts, so I will check on my past paper questions. And do a maximum of 2 questions. So there's a question which was tested in May 2019, question 4C. 2019, question 4C. And I think there's another question which was tested in 2014, that is 2014. So those 2 topics, not 2 topics, but questions, will be able to handle the issue of construction contracts. So let us add to the whiteboard so that we can be able to do a presentation of the relevant questions. But before I add to the whiteboard, remember that now you are preparing for an exam which is coming soon. Remember to understand group accounting. Make sure you understand group accounting. Mostly income statement part, the income statement and the goodwill computation, and the computation of the statement of changes in equity. So those 3 parts. So goodwill computation, we have income statement and statement of changes in equity. That is consolidation. Published is obvious in any paper. So you need to know how you are supposed to do the published accounts. So the relevant income statement, statement of changes in equity, and statement of financial statements. That is for published accounts. You know how to classify expenses if it's an income statement according to the relevant functional heads. Then go ahead and check partnership. That is most likely dissolution. So if they will never bring dissolution, obviously be prepared to tackle a question of branch accounting. Dissolution or branch accounting, but put more weight on dissolution. Go and check insurance, study insurance well. Study the topic of today, construction contract and hire purchase, and you will never go wrong on those areas I have touched. Make sure that you are conversant with those areas I have touched. Leave a comment under this video which is running. Put a comment there. Remember to subscribe. Remember to share with your friends the same video so that we can grow the CP Edwin Ochoy e-learning platform. And you are also welcomed for the next semester's classes, which will be starting from 13th of August. I do online classes, that is morning sessions, evening sessions. And for physical classes, I'm based at Commonwealth House, that is opposite Union Towers along Moy Avenue. That is opposite Union Towers. That is MKU, opposite MKU University, which is, so I have said specifically Commonwealth House, 50th floor. So if you want to come for physical classes on financial reporting, advanced financial reporting, and another unit, we have competent guys at that area. You can come. I also have private classes whereby I have an office around town that is on the same building, the Commonwealth House. So back to the session of today. Let us add to the whiteboard with two questions for construction contracts so that you will be able to understand how you will be able to do a presentation of the same. So this is the question of my concern for the presentation of construction contracts, whereby they were saying that, so this is before I read the question, this is a question of May 2014, question 2B and C. So they were saying that, explain the term onerous contract and differentiate between a fixed price contract and a cost plus contract. So I think for fixed price contract and cost plus contract, we have talked about them. So the only point I can explain is concerning the onerous contract. The onerous contract. So under that, they say that an onerous contract is a contract in which, you were supposed to say this, is a contract in which the unavoidable costs of meeting the operations under the contract exceed the economic benefit expected to be received under it. Like, you know, for example, you are constructing a road, then the unavoidable cost you would incur, you would find that it's exceeding the economic benefit expected to be received from the contract itself. That is when we say that this contract is onerous. So whereby the unavoidable cost of meeting the operation under the contract exceeds the economic benefit expected to be received under the same contract. So provision should be created for the future losses in the period they were determined. I've given an example of constructing a contract. Like now, let's say Nairobi Expressway. So these Chinese guys who are constructing, remember that they have an unavoidable cost they cannot avoid. So if that unavoidable cost exceed what they expect to receive from the contract itself, so that contract of Nairobi Expressway would be onerous contract to the Chinese construction companies. Then they were talking about you differentiate between a fixed contract and a cost plus. So remember that we said a fixed type contract is a type of contract where the contractor agreed to be paid a certain amount upon completion of the contract. So such contracts may include escalation clause. So the escalation clause is whereby, remember that there's a clause whereby you will find that the price of the contract might change. So the escalation clause, this one states that due to various changes, like now inflation rates and so on, that price which was agreed might be subjected to a revision, whereby if it was 600 million, you might find that it's increasing to even 601 million. So a cost plus contract is where the contract is reimbursed for all allowable costs plus a percentage of this cost. So it's appropriate where the amount of labor needed or a material is unclear due to contract variation or uncertainty. So anyway, for theory, you can see it, and also you can go through the relevant theory. So my area of concern is the second part of this question, whereby they were talking about Jing Limited. So Jing Limited is undertaking a project to construct a shopping mall, which commenced on 1st April 2013. So the project was expected to take 3 years to complete at a fixed price of 600 million. So the details of the cost incurred during the year ended at 1st March 2014 are as follows. So we have the architecture and engineering design. We have the site excavation cost. We have construction and materials. We have depreciation on site equipment. We have an environmental impact assessment and the site labor cost. So we have additional information. You are told that the estimated additional cost to complete the project is 279 million. Architect's certificate invoiced to date amounts to 155 million. The progress cash received to date is 140 million. The management is certain that the project will be completed on time. So you are required to estimate the percentage of completion of the project, extract of the income statement, and extract of the statement of financial position. So we can go direct and do the relevant computations. So the first requirement was for us to compute the percentage of completion of the project, percentage of completion. So they need to know for up to this time, which is given. Like now they said that, remember that the examiner gave you the relevant information. He said that the project was to construct a shopping mall. It commenced on 1st April 2013. So it's expected to take 3 years to complete at a fixed cost of 600 million. The details of the cost incurred during the year ended 31st March 2014 are as follows. So as of 2014, you are given the relevant information. That is after 1 year, because remember it started on 1st April 2013. So after 1 year, they have provided you an information of what has been done. So whereby they have provided architecture and engineering design, site excavation cost, construction materials, we have depreciation on site equipment, environmental impact assessment, and we have a site labor cost. And you have been given the additional cost to complete the project, architect certificate invoiced to date, progress cash received to date, and the management is certain that the project will be complete on time. So they need to know the percentage of the work complete to date, that is up to 2014. So we know that I said the method which you are supposed to use to determine this is called the percentage of completion. So the percentage of completion. So percentage of completion. So for the percentage of completion, remember that we always take cost incurred to date. We take the cost incurred to date. We always take the cost incurred to date. Cost incurred to date. We divide with the estimated total contract cost. Estimated total contract cost. Estimated total contract cost. Estimated total contract cost. You multiply with 100%. You multiply with 100%. You can look at that method.
Recording in progress.
We need to know the cost incurred to date, the estimated total contract cost. Then the answer there we multiply with 100%. So I will start by determining estimated total contract cost. So the estimated total contract cost. The estimated total contract cost. Estimated total contract cost. So remember that for you to determine the estimated total contract cost, we have to take cost incurred to date. We have to take the cost incurred to date. We have to take the cost incurred to date, plus we add the further estimated. We have to add the further estimated contract cost. Further estimated contract cost. So which was the cost incurred to date, and which was the further estimated contract cost? I would show you on which figures we are supposed to pick. So for the cost incurred to date, that one was given direct from the question itself. The cost incurred to date. So remember that the contract started on 1st April 2013. So then you are told that the project was estimated to take 3 years to complete, that is at a fixed price of 600 million. So the details of the cost incurred during the year ended 31st March 2014 are as follows. So by 31st March 2014, this is the relevant cost which has been incurred, the total of 161. The total of 161. The total of 161. So this one. So that is the cost incurred to date. So by 2014. Then what about, remember this is this one. Then for you to get the estimated total contract cost, I have said you take the cost incurred to date, which is 161. You add further estimated contract cost. So in short, you add the further estimated cost to finish the contract, for the contract to be complete. So and that one was given in the additional information. So other than the 161, which has been incurred up to 2014, which is the further estimated cost to complete the contract? It's given in note 1. So the estimated additional cost to complete the project was 279. So that is what you are supposed to add here. Then after that, you multiply with 100%. And that is how you will be able to determine the work, the percentage of the work which is completed up to 2014 April. Up to 2014 April. So I'll take 161 plus 279. That is 161 plus 279. Then I will take 161, I divide with the answer, then times 100%. Times the 100%. So it's all about times 100. So it will be 36.6%. So that is 36.6%. So the 36.6%. So that is the percentage of the work completed up to 2014 April. Then now, up to this time, remember that we need to determine the revenue to recognize. The revenue to be recognized, and this one will be recorded under the income statement.
And at the same time, the contract cost to recognize. So revenue to recognize in the income statement, because that is the next thing which is required, the revenue to recognize. So remember that the total revenue which was supposed to be received by Jing Limited was 600, because the fixed price of the contract was 600 million. And that one was shown in the question. They said that the project was expected to take 3 years to complete at a fixed price of 600 million. So the details of the cost incurred during the year ended at 1st March 2014 are as follows. So which means that by 2014, which is it was March, it was not April, as I have been saying. So it was as at what? 31st March. So even that percentage which we have determined is the work which is completed up to 31st March 2014. So I need to know which is the revenue we have to recognize by 31st March 2014. Since I know the fixed price for the entire contract is 600, and I know the percentage of the work completed. So the revenue to recognize by 2014 would be 600 times the percentage of the work completed, 36.6%. So I will take the 600, I multiply with 36.6%. So I will be able to get 219.6. So 219.6. So 219.6. Then another thing is all about the contract cost. Remember, this is all about the contract cost to recognize. The contract cost to recognize. And this one will be recognized in the income statement, which is the next requirement. So remember that they said by that 31st March 2014, by 31st March 2014, the cost which has been incurred is 161. But for the contract to be complete, there's an additional cost which is required, and it was in note 1, 279. So the total contract cost for the contract would be 161 plus 279. And this one is giving me the 440. So to determine the contract cost to recognize as at 31st March 2014, I will just multiply with 36.6. That is the percentage of the work completed. So I will multiply with 36.6%. So it will be 161. So 161. So 161. That is the contract cost to recognize as at 31st March 2014. So the examiner was in need of, the second thing which the examiner was in need of is the income statement. And since I have the items to record, it will be an easier work. So I will say income statement. I will say income statement. So remember that this is an extract. So this is just an extract. So the income statement extract. So for the year, so it was for the year ended. That is for the year ended. For the year ended 31st March 2014. So it's 31st March 2014. So it's all about 31st March 2014. So I would have to recognize the contract revenue, which already I have by the time of 31st March 2014. So contract revenue. So the one which we have already determined, so 219.6, and the contract cost. So the contract cost is 161. So if I subtract, that is a 219.6 minus 161. So I'm getting 58.6. So that is 58.6. So that is the gross profit. That is the gross profit. That is our gross profit. Now, the next requirement, which was the examiner in need of, the examiner was in need of a statement of financial position. The examiner needed, we do the statement of financial position. So we are done with the percentage of the completion of the project, which is 36.6. We have done an income statement. And the last thing is all about statement of financial position. So for you to determine the statement of financial position, remember that the first thing you have to determine is all about the client's balance. Then I have to determine the work in progress. So to determine the client's balance, which is the same as the receivables. So I have to determine, so there's a working here I have to do. So the first working I have to do, I have said it's concerning the client's balance. So that is the client's balance, or we call it receivable. We call it the receivables. That is the receivables. So in order to determine this, remember that you start with what you have invoiced the client to date. That is to 31st March 2014. So invoice to date. Remember that when you send an invoice, you are claiming a payment. So you always send an invoice to claim a payment. So the invoice which was done is all about invoice to date is 155. So active certificate invoice to date is 155. So out of that, the cash received is 140. Cash received to date is 140. So you take 155, which you invoiced, you raise the cash which you have received. So cash received. So the cash received to date. So cash received to date is 140. So you can see that the balance there is 15. So the balance which you have not received from the client is 15. And remember it was in terms of millions, so that is 15 million. So our question was in terms of millions. Our question was in terms of millions. So you can realize that. So that was 15 million. So after that, I say the next thing we have to determine is the work in progress. The work in progress, which concerns the work yet to be completed. It concerns the work yet to be completed. So that is what we always say, that work in progress. So other than the client's balance, we have to determine the work in progress. So the work in progress, we start from cost incurred to date. The cost incurred to date. Cost incurred to date. So you start from the cost incurred to date. So the cost incurred to date, you remember it was 161. You remember very well. Then remember that when you are invoicing your client, you cannot only invoice the client the cost which you have incurred, but you have to add some gross profit margin. You have to add some gross profit margin. So the gross profit margin. So the gross profit margin. So the gross profit margin was 58.6. 58.6. So if you take the cost incurred to date plus 58.6, I will get the 219.6. And you remember that the 219.6 is the same as the contract revenue, which was received up to date. That is as at 31st March 2014. So which means that they had received the cost incurred to date plus the gross profit margin. Then you have to deduct. You have to deduct what you had already received. So invoice to date. What you have already invoiced, not received. What you had already invoiced to date. The 155. The 155. So if I deduct 155, I will be able to determine that the work in progress is 64.6. It's all about 64.6 million. So I will conclude by saying that Jing remittent, so statement of financial position. Statement of financial position. So the statement of financial position. Remember, it's an extract. As at 31st March 2014. As at 31st March 2014. So on this scenario, we have only the assets. We have the assets only, whereby we have the amount which the client owes you, the current balance, which I said the receivable, the one I determined first, the 15, and already the work again to be completed. So you expect again, once you have completed this work, you will be receiving 64.6. So the 64.6. That is what you are supposed to record in the statement of financial position. And that is the end of that question. So beside this question, there was another question for construction contracts, which was on May 2019, question 4. So May 2019, question 4. So let us check on that one so that we can say at least we have done a current question. And this is the last time they tested construction contracts, May 2019, question 4. Let us check on that one. So here is the question. So this is May 2019, question 4C. They were saying that Michengo Construction Limited carried out work on 4 construction contracts during the financial year ended 30th April 2019. Details of construction, not construction, they have said details of the contracts are set out below. We have the contract price, contract, that is cost to date. We have estimated total cost, payment on account, revenue recognized in the previous periods, cost recognized in previous periods, administrative expenses. We have date of commencement. So remember that we have various contracts, because they said Michengo Construction Limited carried out work on 4 construction contracts during the financial year ended 30th April 2019. So there's this one of A01, A02, C03, D04. So date of commencement of A01 was 1st May 2017. The other one was 1st April 2017. 1st March 2017. And we have the other one is 1st March 2019. Additional information. The company does not recognize profit until the contract is at least 5% complete. So there's no recognition of profit until the contract is 5% complete. Note 2, the company's policy is to calculate the percentage of completion on cost basis. the company prepares separate trading accounts for each contract. So you are required to do what? Trading accounts for each of the contracts showing clearly the revenue to be recognized for the year ended 30th April 2019, income statement extract, and an extract of statement of financial position, showing the combined totals for all the contracts. So we can do it. So the first thing we have to determine, obvious, is the percentage of completion, the percentage of completion. So obviously, this is the method which is recommended. So the percentage of completion, we said that we take the cost incurred to date, cost incurred to date. You always divide with the estimated. We divide with the estimated total contract cost, estimated total contract cost. Then you multiply with 100%. You multiply with 100%. So like now, contract A01, contract A02, contract A03, then contract A04. So how can I determine the percentage of completion? Using the cost incurred to date, you divide with the estimated total contract cost, then you multiply with the 100%. So like now the first one, the first work which you have to do, the cost incurred to date, the cost incurred to date. So the cost incurred to date is, so the cost incurred to date, like now the first one is 180, the one which is given there. So the first one I will take 180. I will divide with the estimated total contract cost. The estimated total contract cost. The estimated total contract cost, you can see it's given. The estimated total contract cost, it's already given, the 720. So you pick a 180, you divide by 720, you multiply with 100%. So that is how you get the percentage of completion of the first contract. So 180, I will divide with 720 times 100%. So the first one, I'm getting 25%. Then the next one, I will do the same for the next one. So like now the next one, the cost to date is 480. So you just take 480, you divide with 768, you multiply with 100%. For the third one, you take a 963.6, you divide with 1069.2 times 100%. Then the last one is 33.6, you divide with 840 times 100%. Times the 100%. So let us do each of the computations. So like now for 80, divide 768 times 100. So this one I'm getting 62.5. That is the percentage of completion of the contract A02. Then the other one is 963.6. You divide with 1069.2. Then you multiply with 100, so 90.1%. Then the last one is 33.6. You divide 840. 10 times 100. So this is 4%. And remember that there's somewhere they mentioned that for you to recognize revenue, the contract must be at least 5% complete. That is according to note 1. The company does not recognize profit until the contract is at least 5% complete. So which means that the one for A04 will not be recognized because it's less than 5%. So what was required is all about the trading accounts. The trading accounts. So we have to do the first one. So the trading accounts. So for the trading accounts, there is this one of A01, A02, A03, and A04. So we start from the revenue. Revenue to be recognized. So for the revenue to be recognized, remember that to determine the revenue to be recognized, for the first one, that is A01, the contract price was 780. That is 780. But remember that the work which is complete is 25%. So the contract price is 780. But for now, the work which is complete is this 25%. So I would have to take the 780, I multiply it 25%. That is how I get the revenue to recognize by that time of the work which is completed. That is 195. So you have to do for the second one, of which you have to use 62.5 of the contract price. The third one, you use 90.01 of the contract price. So let's do the second one. The second one is 1200. So if I take 1200, I multiply with 62.5%. So this one is giving me 750. Then the third one, I take 1020. I multiply with 90.01. 90.01% was the work which is completed. I'm getting 919.02. That is 919.02. Then the last one was 948 times 4%. Times 4%. So I'm getting 37.92. So that is 37.92. So after the revenue to be recognized, remember this one, we have taken the contract cost, we have multiplied with the percentage which we determined of the work which is complete. So percentage of completion. So after that, we have to deduct what has already been recognized in the previous period. We have to deduct what has already been recognized in the previous years. So the revenue recognized in the previous periods, you can see we have 78, we have 180, and we have 504. So 78, we have 180, and we have 504. That is what you deduct. So subtract the revenue recognized in the previous year. Revenue recognized in previous year. So the revenue recognized in the previous year, you have already we have already determined this one from the question direct. So these are given from the question. These are given from the question. So it's there, 78, 180, and 504. Then the last one is dash. So remember that I can see there's somewhere we did a mistake. That is concerning numbering of the contract. This one was B, this is C, and this is D. So the same here. So this is B, this is C, and this is D. So it's supposed to be A01, B02, C03, D04. So anyway, it's okay. For the computations, they are okay. So for the deductions, again, we have to determine for the deductions so that we know the revenue to be recognized. So that we know the revenue to be recognized. We have to deduct the revenue to be recognized. So 195, you minus 78. So the first one, the revenue to be recognized is 117. 750 minus 180. So that is 570. Then the third one, we have 919.02. You minus 504. So that is 415.02. Then the last one is 37.92. Then from there again, we have to deduct the cost incurred. So the cost incurred during the year. The cost incurred during the year. So consider the cost incurred during the year. So for the cost incurred, to determine the cost incurred during the year, so if it's not given direct, so for you to get the cost incurred during the year, if it's not given direct, you have to take the cost in to date, you minus the previous year cost. Cost to date, you deduct the previous year cost. Like now, for the first A01, the cost to date is 180. We have to minus the cost recognized in the previous year. The cost recognized in the previous period for contract A01 is 60. So if I take 180 minus 60, I get 120. So that is what I have to record here. So the 120. So that is the cost to date minus previous year cost. Then for the second one, that is B02, the cost to date is 480. 480 minus the cost recognized in the previous year is 72. So minus 72, that is 408. I'm getting 408. So 408 is what you are supposed to deduct. Then after that, we have a contract C03. For C03, the cost to date is 963.6. 963.6 minus the cost recognized in the previous period, that is 480. So if I use my calculator, I'm getting 483.6. So that is the 483.6. Then the last one, it's just the cost incurred to date. There was no previous year cost. There was no cost recognized in the previous period. So which means that the cost to date is 33. So 33.6 minus 0 is 33.6. So from that point, I have to deduct these balances. I have to deduct these balances so that I will be able to get the gross profit or loss. I have to determine gross profit or loss. So 117 minus 120. So this is a loss of 3. Then 570 minus 408. So this is a profit of 162. Then the another one, 415.02 minus 483.6. So this one is a loss of 68.58. We have a loss of 68.58. Then the last one, we have 37.92 minus 33.6. We have 4.32. We have the 4.32. The 4.32. So that was the first requirement. So that the next requirement was concerning income statement. So it was Michenko Company Construction Limited. So Michenko, it was Michenko Company Construction Limited, Company Construction Limited. So that is a Company Construction Limited. So they need an income statement. Income statement. So the income statement that was for the year ended 30th April 2019. So we have A01, so B02, C03, and we have D04. So the first thing to recognize is the gross profit or loss. Gross profit or loss. So for the first one, it was a loss of 162. So this is the one which we determined from the trading account. Then we have a loss of 68.58. Then for the last one, it would be just dash. Because they said we don't have to recognize profit if the contract is not 5% complete. Remember, this one was just 4% complete by this time. So I will never recognize this profit of 4.32 because this one is not exceeding the 5%. So then I have to raise expenses. I have to deduct the expenses. So for the expenses, which was present on this question, there was one of the expense, and that one expense was concerning administrative expenses. So 1.5, so I have to deduct 1.5. We have 15, we have 2.5, and we have dash on the last contract. So that one I have to deduct from either the loss or from the profit, which was already determined from the trading statement, which we did. So if I take 3 a loss and I minus 1.5, obviously it would be 4.5. This one doesn't need a calculator. Even the second one, 162 minus 15. That one is 147. Then the third one, I have to take 68.58. I just add 2.5. This one would be 71.08. But remember, it's a loss, that this is dash. Then after that, the last thing which was required for us to do is all about the statement of financial position. The statement of financial position. But now, according to the question given, what I can only determine is the work in progress. I cannot be able to determine the receivables. That is the client's balance. So let us do the determination of the work in progress. So determination of work in progress, remember that we have a contract A01, B02, Z03, then D04. So we have to start from cost to date. Cost to date. So cost to date, this one is given direct from the question itself. So the cost to date, you consider is 180. We have 480. We have 963.6. And the last one is 33.6. Then we have to consider the gross profit. Remember that I said, even if when you are invoicing your client, you cannot only invoice the cost in card. You have to add the profit, which you are in request from that client. So other than the cost only, you have to add some profit, which you need the client to pay. So gross profit or loss. So the gross profit, I remember we got a loss of 3. This one was 162. This one we did it from the trading accounts. So this one was 68.58. Then the last one we did, it was dash. So if we compute there, this one is 177. So 480 plus 162, this is 2. This is 4. That is 5. That is 6. 462. Then what about the third one? 963.6 minus a loss of 68.58. So that is 895.02. 895.02. And the last one is 33.6. So that is what you are supposed to invoice. Invoice the client. But the client had already made some payments. The client had made some payments. So payment to account, payment on account. So there's this payment on account which you need to deduct. So payment on account. So the payment on account, we have a 156, 780, and 918 and 24. So 156, we have 780, we have 918, and the 24. So as a contractor, in some scenarios, it will come into your attention that the client has paid more than what you were in request. And in some scenario, you will still be requesting some amount to be paid. So like now, the first one, you will be requesting 21 again to be paid. But for the next contract, that is B02, the client paid more. You invoice the 642, he paid 780. So this one, you owe the client. As Michengo, you owe the client. That is a liability. So maybe if you have not completed the work, it would be an offset against the work which is supposed to be done, which you have not done. The same with the C03, you owe the client 22.98. So this one will be offsetted. It will offset against the work you are going to do. So it's like he has paid in advance. The client has paid in advance. Then the last one, you demand 9.6 from the client. So that for you to do the statement of financial position, so you say Mijengo company, that is a construction remittance, statement of financial position. So the statement of financial position, statement of financial position as at that is 30th April 2019. That is as at 30th April 2019. So we have the assets which we need to recognize there. That is according to the work in progress. Work in progress. So for the assets, remember that it's all about what you are still demanding. So 21 plus 9.6, this one. So these are assets to you because this is like the work which you are going to do. So you are demanding some amount from the client. So 21 plus 9.6, that is 30.6. Then we have some liabilities whereby the client paid more. So he paid more than what you invoiced him. So like now we have here 138 and 22 points. So 138 plus 22.98. So 138 plus 22.98. So that is 160.98. And that is how you were supposed to do this question of 2019. And that marks the end of the topic of construction contract. So what I can request is that never forget to subscribe to the channel. And for the guys who are preparing for the coming exam, that is to be specific, the August exam, I wish you all the best in your paper. And I will request that we meet in section 5 and 6. And if you could like to join my online classes, you can be able to call me through this contact, that is 0728 760 546. Again, for any question again, you can be able to reach me through the same contact. For the social platforms, if you would like to follow my Facebook page, I'm CP Edwin Ochoy. So you can search and you will be able to see my page, which covers the contents of accounting. So you can have a nice time and all the best in your endeavors.